Hello, guys. I'm here again. My name is Joseph AGK Orji. Welcome to my stock analysis show. Remember, I always say this. My goal is to make you rich by showing you the right stock to put your money in, the right stock to invest in, the right stock to buy and hold. Again, remember, this is not stock investing is not a get-rich-quick business. It's a business that requires you to be disciplined, pick the right stock, buy it, hold it, and wait for 2 years, 3 years, 5 years for the value to go up. Then you can sell it and make money. Even if you don't want to sell it, you can leave it for even more longer time. And then if the value goes up again, you can make even more money. So what I'm doing here is to show you the right stock, and then you can now make a decision. I will tell you my conclusion about the company with respect to whether it is the good buy and hold or don't buy or sell it. So, all right, let us start the ball rolling. Our stock of today, or our company of today, is a company that is called Shell PLC. Shell PLC. Excuse me. I'm sure that many of you know about this company that is called Shell. Shell PLC, as you know, is an oil company. It is originally called the Royal Dutch Shell PLC, and it is a multinational oil company, oil and gas. They deal in oil and gas, and their headquarters is in London, United Kingdom. Now, Shell explores for and also produces oil and gas from the conventional fields, or you can source it as tight rock from a rock shale, or from shale, or from coal formation. So the company also operates their refining and petrochemical complex across the world. It's a multinational company, multinational oil company. So these are the companies that are, for the past 50 years, these are the rich company that people have made a lot of money by investing in share stock. But let us see how if the stock is still good for investment. So my analysis of Shell, I wrote Shell. This is Shell, not Netflix. Of Shell PLC will be based on the information I obtained from four places. The company's financial statement. Then, of course, when I say financial statement, I'm referring to income statement, balance sheet, cash flow statement, and the company's stock information. Now, to get those information, there are two places. I mean, there are many places you can get it, but the one we're using is the one where we can get it free of charge. And where is the place we can get that free of charge? From the Yahoo Finance. So I'm going to go to Yahoo Finance, finance.yahoo.com. As you can see from the screen, open Yahoo Finance. So I'm going to type the trading symbol for Shell, SHEL, and the Shell will pop out. So I'm going to open it. Let me begin by looking at the chart for Shell. Let's see what the chart says. So I open the chart, and you can see from the screen, it doesn't tell me any pattern yet. So I'm going to insert a moving average to that. Okay. Let's see. So this is the moving average, the one in red color. It shows an upward trend, and you can see that the stock price for the most part. I mean, this is for 2 years moving average, actually. For 1 year moving average, looks like this. And for 5 year moving average, you can see, at least from about 2021 till today, for the most part, share have been trading above its moving average. What does that tell us? Well, as you know, when a stock is trading above moving average, it indicates a bullish trend. And many investors, including myself, perceive it as a positive for long-term investment stability and long-term investment stability and for growth prospects. Yep. And another good thing about share is that, see, you can see all these D's, they mean dividend. So the company have consistently been paying dividends every quarter. So even if the stock doesn't move the way you want, at least you still get a share of the profit they're making in form of dividends. As a matter of fact, dividend-paying stock are good indicator that stock is good, because it is when if the company doesn't make money, they don't pay you dividends. So the fact that they pay dividend consistently means that they are making profit. That is a good sign. Now, of course, you know that we cannot rely only on what the moving average is saying. So let us go to other things, other information that we need about share. Look at the statistics. Okay, for the year ended in 2023. You can see that. Let's start with profitability. Share remains profitable. Okay. Now I can see that we have 6.11%. That is the profit margin. That's what it says, which means that yep. So it means that approximately, I mean, it's moderate. A moderate profit margin raises, signal reasonable profitability, but it's consistent. Well, I've shown you the dividend, so you can see the dividend is good. Anyway, 6.11% is not bad. So for every dollar of revenue, share returns approximately 6 cents for every dollar of revenue. That's what it means, at 6.11%. Now, operating margin is 3.95%. This is slightly lower. It is a slightly lower margin compared to the profit margin. And it reflects the impact of operational expenses, and it also suggests that the average operational efficiency of it for the company. At this point, well, we can look at the management effectiveness, return on asset of 5.21%. Okay. Well, what can I say? It's not bad. Simply put, share PLC effective use of assets to generate earnings is evident by this number here, with a good return rate. Consider that it has over 5%, which is typically favorable. It's 5.21%. Now return on equity is 10.31%. What can I say? Well, but let me put it as simple as I can. As simple as I can with this 10.31%. I will say that share generates 10.1% return on shareholders' equity. And also, this indicates efficient use of equity capital. At this point, we can go to the income statement. Revenue is $316.62 billion, which demonstrates a vast scale of operation. And revenue per share is $94.4, $94.04. What this tells us that, it gives an idea of the revenue amount generated per share for this company. Excuse me. Now, we have quarterly revenue growth of negative 22.3%. Well, this is concerning, a substantial decrease. It is negative 22.3%. Is a substantial decrease, and it signals potential business challenges or market conditions. Well, it is probably, I would say it is probably because Shell is set to exit Nigeria. Now, all the Nigeria's onshore oil and gas operation after agreeing to sell the business to a consortium of 5 most local companies for 2.4 billion. So that means that decision to, offload some of his assets in Nigeria could have been the reason why I have this, quarterly revenue growth of negative 22.3%, because Shell really have significant footprint in Nigeria. So I'm not surprised. I mean, it could be because of that. Now, going back to our list, we have the EBITDA of 46.22 billion, which is strong, it's strong core profitability before interest, taxes, and the amortization. I mean, it's very strong. And then we have net income, which is a fancy name for net profit. It's 19.36 billion, which shows a substantial earning available to shareholders. Yeah, Shell have a, start kind of a significant earning profit available to shareholders. Now, the diluted earning per share is 5.70. And this indicates that earnings of the same thing, $5.70 per share, reflecting profitability. Then quarterly earnings growth of negative 95.5% is really a severe decline, and it indicates recent profitability challenges. Now let's look at the balance sheet for this company. Now, total cash, 38.77 billion, indicate that Shell has a, the liquidity has a good liquidity, and it has the ability to cover its short-term liabilities, short-term debts. So, and total debt is 81.64 billion. For this kind of company, is high, really, actually. And it warrants more scrutiny regarding how the company services their debt. Because debt can, actually put the company in big trouble. If there's too much debt, they can't get more, they cannot raise money to do more projects that will add value to the company. Especially the one that made the company to collapse very fast is the short-term debts. Because they cannot make payroll, they can't pay their utility bills, they can't pay their suppliers. That's a big problem. Suppliers don't have to wait for 1 year. They need their money every month. Workers need their money every 2 weeks. So if you can meet up with those, even if you're going to make money in the next 1 year, nobody cares. So short-term debt is important for the company to be able to make it. I mean, long-term debt can be restructured. As a matter of fact, they can restructure it, make it. But short-term debt, if you don't pay an employee, he's not gonna come to work. If you don't pay a utility bill, you don't have electricity to do your day-to-day operations. So it's that's why I said that debt is, very, very. I mean, you have to it needs scrutiny. Now, I mean, many things we know about these companies are good so far, except this debt, short-term debt, and total debt. Now, let's look at the debt to equity ratio. We have current ratio. They have a debt to equity ratio of 43.34%, which is moderate. That means that 43.34% of the assets are financed by debt. Not too bad. Then you have current ratio of 1.4, meaning that actually Shell can handle their short-term debt comfortably. So for every $1 of debt they have $1.40 to take care of it, which is good. Then let's look at the cash flow statement. Cash flow for operating cash flow is 51.19 billion. Well, this shows that it shows a strong cash generation from core business. Then level cash flow of 28.56 billion indicate that the company have enough cash after their financial commitments. So that means they have financial flexibility. As a matter of fact, this debt ratio, current ratio, debt to equity ratio, and operating operating cash flow makes me feel good. So they can handle their debt comfortably. Now, so what do we say about this company? Eventually, Shell Petroleum. Oh, let me look at the level cash flow. Yeah, I think I've already did that already when I said that Shell has financial flexibility. Now, what is the long-term forecast for this company? I would say that despite this share is currently trading at $72, is 6% per share. So, I mean, from what I've just read, I think it will gonna go up more. And probably, even in as much as we are going, people are electric vehicle, through this green revolution is there, but still, we have green revolution, we have electric battery cars, and so on and so forth. But those things we still have a long way to go to be able to generate all our electricity or drive all our cars only with batteries. It's a long time. Fossil fuels is still the main thing. It is where to be. If you look, so anyway, I think you get the point. Now we have our final decision on Shell. Despite the robust revenues, solid profitability margin, and strong cash flow, the sharp decrease in the quarterly revenue, talking about here, of negative 22.3%, and the earnings growth of 94.04 is concerning. It necessitates cautious monitoring. So, but in general, I would say that the current ratio of 1.4, what is it again? 1.4, and the strong cash flow of 54.19 billion. And then, these two things, they're good for the company. Yeah. Now, for long-term investors in general, the Shell's solid financial foundation, including their robust operating cash flow and liquidity, is very reassuring. Its large-scale operation and profitability are promising for long-term investments too. What can we say about the final conclusion about this company? I will take you to where I will now put the concluding remark on Shell. Is it a buy or a sell? The answer is buy. I'll buy it and hold it for at least 2 years. At least 2 years. If it's gonna increase in value, definitely, because like I said, the demand for fossil fuel will continue. The age of electric vehicles, they're coming, but it's still far off. And the day we will depend from energy from wind turbines, from the wind vane, from the sun only, from I'm talking about green energy. It's still long way go. Even those facilities like wind vane that requires green energy, they get their, I mean, they're operated using the fossil energy from fossil fuel. So we still mankind still depend on oil a lot. So, and because of that, the value will go up. Unless something else happens, and maybe an act of nature. Other than that, it's a buy, share, and hold it. Thank you for listening, and I'll see you in my next lecture on this, on a new company. Bye-bye.